Hello, I'm Jim Lebenthal, the Chief Equity Strategist at Cerity Partners and a member of our investment office. This is our outlook on the financial markets for the month of July 2025. I want to start by noting that what I'm going to talk about here are presidential policies and their impact on the financial markets. I realize that for many people who are listening to this, the idea of talking about policies is easily conflated with politics. I do not want to talk about politics, nor do I want to inflame people's emotions that are understandably high. Really, all we want to talk about are policies and their impacts on the financial markets. Right now, the financial markets are strong pretty much across the board. The equity markets are within 1% of an all-time high. Interest rates, as measured by the 10-year Treasury at 4.3%, are right in the middle of a range of roughly 3.9 to 4.6% that they've been in for most of the last 12 months. And commodity prices are fairly muted. Crude oil has been going down and remains at a very low level. Now, all of this can be seen as somewhat surprising in light of recent news that the U.S. military has been involved in a kinetic war in the Middle East. Normally, that would cause equity prices to go down, crude oil prices to go higher, neither of which has happened. Additionally, the tariff policies, which were announced 3 months ago, initially moved equity markets meaningfully lower, and they have since recovered all of that decline, and as I said, are within 1% of an all-time high. The financial markets seem to be telling us something. The financial markets seem to be telling us that they think these presidential policies are going to work. Now, I want to state this again. I'm not talking about politics. I'm simply talking about what the financial markets seem to be saying about the policies. And they seem to be saying that the deficit increasing impact of the budget bill currently working its way through both houses of Congress is likely to be completely offset by the deficit reducing impact of tariffs. That's a concept that we brought up in last month's Outlook, and it has since been confirmed by the Congressional Budget Office, the nonpartisan agency that is supposed to score budgetary impact of policies. The financial markets seem to agree with that analysis. That's where our head is as we head into the second half of this year. We also want to note that the economy remains strong, with the Atlanta Fed GDP forecast for this quarter at 3.4% and unemployment at 4.2%. If the Federal Reserve cuts interest rates 2 times this year, as we expect it will starting in September, that could further buttress those strong economic figures. Put this together with a growing profit picture, and we feel enthusiastic about equity market returns from here to year end in the context of a fairly stable interest rate environment and a fairly stable commodity environment. I hope this helps, and I look forward to updating you in 1 month. Thank you.